Hi, my name is Rachel Williams. I'm the Director of Accounting at the John Hopkins Group. I'm here today to speak with you about pay-as-you-go withholding variations. But first, let's go through a few key concepts. Pay-as-you-go withholding is the tax that your employer deducts from your gross salary each pay period to give you your net take-home cash position. You would be aware that every 30 June you are then required to lodge an income tax return with the Australian Taxation Office that reports your gross salary plus other income less deductions to give you your taxable income. It's this taxable income that you then determine your tax liability on. The tax return then compares your pay-as-you-go withholding that your employer has deducted on your behalf and remitted to the ATO with the resulting tax liability in your income tax return, and any positive or negative amount is either your refund or payment. Now let's assume that you have a negatively geared investment property for the year ended 30 June 2015. This means that your interest, depreciation and other expenses exceed your rental income. Let's assume that you are on a gross salary of $70,000. Your employer would deduct approximately $15,400 in pay-as-you-go withholding tax, giving you a net cash salary for the year of $54,600. Let's assume that your rental property loss is equal to $15,000. This means that your taxable income would be approximately $55,000. That is your $70,000 gross salary less your $15,000 net rental loss. The tax liability on your $55,000 taxable income would be approximately $10,250. Therefore, when you lodge your 2015 income tax return, you would be due a refund of approximately $5,150. But that's over 12 months away before you get your refund. How are you going to fund your net rental loss in the interim? This is where a pay-as-you-go withholding variation can help. This is a mechanism whereby we lodge a form with the ATO advising them what we think your estimated tax refund will be. The ATO communicates with your employer and advises them to reduce this refund off the pay-as-you-go withholding tax that they deduct from your salary each pay period. This means you effectively get your income tax refund now rather than having to wait 12 months. On the $5,150 refund, this is an extra $429 in cash in your pocket every month. So how do we do it? It's as simple as lodging a form with the ATO online and they communicate with your employer and you have nothing else to do. A variation is not only helpful for a negatively geared rental property, but also any other type of negatively geared investment, such as shares or managed funds. It can also be useful where you have large deductions for the financial year, such as perhaps a motor vehicle, work-related study expenses, or some other work-related travel expenses. It's also useful where your employer pays you an allowance and you have a tax-deductible expense to claim against that allowance. The variation enables your employer not to deduct pay-as-you-go withholding tax on that allowance, thereby giving you more money in your pocket each month. If you think that you could benefit from a pay-as-you-go withholding variation, please don't hesitate to contact our office and speak with one of our experienced accountants. Thank you very much for your time and have a great day.